Good morning, friends. Welcome to the 24th episode of State of the Market Live. Today is July 7th, 2022. Let's see how the market has behaved yesterday and how it's going to respond to us today. So let's first have a look at SGX. We need to have a clear understanding of how the market is behaving here. Here we are trading near 1641. I have told you in earlier commentary or in my Telegram channel that 16035 is the level. You can go back and see in my channel. So 16035 is the level where we have to kind of take support. That means this is the level we have to break before we cover the gap which is on the which is near the resistance basically. So let's look at Nifty futures. So SGX is kind of exactly trading at the level where we want it to be. So it is neither bullish nor bearish. So I told you that 16035 is the level which we have to break decisively on the downside above 15951. So above 15951, this is the level we had to break. 16 kind of 030 levels or 035 levels. Now the thing is, we kind of rejected for a couple of days. Like on 5th we were rejected, on 6th we stopped there because we waited for the FOMC meeting minutes in US. Yesterday in FOMC meeting minutes there was no surprise. Let's see where ES is trading. This will give me a fair idea of what is happening in the market there. So you see that at 3822 is the level which I want to be beaten by the market. That means it needs to be staying above this level. As long as the market is above this level, this is like I would call God's level, because this has been kind of punishing most of the traders in US markets. You see that this kind of level has been, kind of trading, kind of punishing most of the traders in the US markets. So now what is that we have to expect in our markets? So in our markets, we have to stay above. That means this is the gap that we are looking for to cross, and it has been tough for the market to cross. However, now it seems there are some slight indications of the market to cross the gap. That means there is some slight bullishness because there is a lot of put writing as well. However, call writers are not backing off also, but eventually one side has to break. But this looks like a bullish pattern. If you look at the price action, from the price action side, you see that this particular level, like, this is, you see a base is formed, and slowly you see that we are forming a higher lows, and this kind of indicates a bullish action here. However, there is a fair kind of resistance here. So in the during RTH, that is during regular trading hours, we need to break this level and kind of hit this barricade, that is 16200, where again call writers will be waiting. So this entire path, that is from 13th June to kind of today is 7th July, so almost 1 month, we have seen that players would have positioned a lot in terms of call writing. This has to be broken. So we need to make a good push above 16035 and 16200. So once we are above 16200, then we can get some kind of leeway into the upside. However, what are the levels that I have to kind of look for on the upside? This is where our challenge begins. So Thinking, estimating that the market will go up today. I mean, I'm still not kind of convinced about this bullishness. However, if we want to expect bullishness, let's see, where it can go to or what it has to break. So yeah, we need to break around 16,238 is the level where again we may face resistance. So around 200 points, around 200 points of this zone is going to be very important going into this expiry. Depending on pre-open, you can see whether the market is bullish or it is going to be bearish. On the downside, our levels are very clear. So they are 15,951 and then 15,830, 15,860. So these are the levels which you have to keep in mind. I'll write it down here so that you can come back and kind of see them. So we have to, on the downside, we need to keep these levels into picture: 15,951 and then 15,860 to 830 zone. So below this zone, we can easily expect a negativity. So below this zone, we can easily expect negativity back into this range. So this is the range we will look for. And then about 200, 15,035, we need to look for 15,238. If it is broken, then we can have some kind of traction on the upside. However, there is a fair chance we can trade here. So let's mark our zone 1. So this can be our zone 1 today because there is a lot of bullishness. We need to be ready for that. And there is a fair chance of happening zone 2. So because there is a lot of put writing, I'll expect any extension of this zone into zone 2. However, I'll be more than happy if I make my money within this zone 1. I'll exit for today. And also what I'm seeing is if we have an update here, let's repicturize it. So if we have an update here like this, so tomorrow we may have a down day, we may have an inside day, because any expiry day after that day, it can be a negative trend day. This is zone 1 and this is my hypothesis 1. This is the first scenario I am trying to play out. However, if 1635 is rejected, so this is the zone I will be looking for. So I'll be looking for the low of 15,800 to be touched for expiry if put writers are threatened. And in that case, tomorrow we can have another inside day which is up. So this is zone, kind of we can put as zone 3, because there is low probability of downside as of now. However, it still can happen. And this is zone 2. So any kind of super bullishness, because we see a lot of put writing happening. So I'm not convinced. That's why I'll stick to trades here. However, if there is a possibility of going here, it has to happen today. Then we will check for levels and I'll update them in Telegram. Please stay tuned. If the other scenario happens, that means if zone 3 happens first, there is a fair chance of this also happening. Then we need to look for levels on the downside. So we may have a day like this, something like this. So basically we need to respect this level. That is the reason why I said the low of this green bar. So let's again redraw for the downside. You can watch the video again. So basically this is the low, is the line on sand if we have to break on downside. So this is the kind of zone on the downside we can live with. Below this, it can be a big fall, and this is the kind of momentum we will see on the upside, and then we can see a move above this one. So that's it for Nifty. Now let's see what is happening in Bank Nifty. Let me remove this. Yeah. So in Bank Nifty, you see that there is slightly good bullishness. You see that there is a slight good bullishness. That means we have covered the gap eventually. So the nastiness in price action here is gone now. So there is no more, kind of problem here. However, what I see is in Bank Nifty, the situation can be a bit bearish. It can be bearish. What is the reason? So why I am expecting that is, sorry about it, just a minute. This trading view is, oh God. So let's see this. This is a wrong way to interpret anywhere. So what I am going to do is I'm going to move this so that I can get it here. Yeah, exactly. So now why I am saying this is here we have consumed liquidity in this value zone. So probably we may move in this zone in Bank Nifty. So 34,400 is a key level. Sorry, 34,200 is a key level. So around 34,400 we may see some kind of resistance. And for Bank Nifty, it has to break 34,991. That is 34. Almost 35,000 for any bullishness. If it fails in this zone, then it can get back into this zone. So I am expecting this to be zone 1 in Bank Nifty. That means there is a chance of bullishness in Nifty. However, Bank Nifty may drag it down. So any move below 33,800 is bad for Bank Nifty. So this is my zone 2. So from tomorrow, I'll use the text option here. This writing is bad. So in zone 3 is very low probable zone. So unless we see a lot of action, unless players want to lift Nifty further, they will not lift Bank Nifty. If at all it has to go up, it can go up to 35,000 as well. So you need to be careful on the upside. Any break of 34,400, it's going to take us to 35,000. So 34,400 is the level you have to keep in mind on the upside, or any move in a range and then any move towards down. That is, this is my zone 3. This is a low probable zone in both Nifty and Bank Nifty. So we need to take care of this zone. This is a value zone. So a lot of action is still pending here, and we may kind of move here before making a further move on the upside. However, if we make a move on the upside, so this is the zone I will keep in mind. So we have to be very careful about that, because there is a dichotomy in Nifty and Bank Nifty futures, and we need to play both accordingly. Let's look at Reliance and also HDFC Bank and HDFC futures. I'm sorry about that. Where is my screen? Sorry, it's gone. Yeah. So Reliance is kind of, you see, kind of indecisive price action. I told you for many days to come, we can see Reliance moving in this range. So let's look at the daily chart and see. So basically, you see that, there is indecisive action. You see here, continuous dojis 2 days. Kind of this is indecisive price action. So we need to trade in this range, because large players are buying here. It doesn't mean it will not fall. When they buy, it does not mean immediately it will rise. So they may again want to buy at lower levels if market falls and if there is any negative price action. Otherwise, the stock can go up if we kind of move towards 2600 level. So again, we have to break this level. So in terms of price action, we have to break the high of this one. So basically, which is around, let's measure it. What is the need for just drawing? So basically, this is the level of 2612. If you see, during one of those days, I have given longs around this level to my clients, and this level has not worked. It has not worked means it has worked for shorts. So now on the upside, if you want to take any positional trade, you need to kind of take risk management into account. So if you want to enter on break of 2452, which I have mentioned is a key level, you should take only 50% here, or even 25% of your position. And then when it reaches 2613, you should go for another kind of entry here. Otherwise, you'll end up kind of bearing a lot of pain if you are holding a large position at these kind of levels. So this is a good entry. However, we need to take partially. We should not go all in. That is always very important in investing or in trading, especially in position trades, because of the gaps. Now, let's see what is happening in HDFC Bank futures. So HDFC Bank futures are a bit positive. This is a very ugly price action. These days charts are looking very ugly because of this big unseasoned bars. So here we need to break this high. We need to break this high. So if we are breaking this high, today we can have very good, kind of traction on the upside. So it is 1381, and you need to keep a decent stop loss, which should be around the bar low, which is around 30 rupees. That's too far. So in intraday, you need to check what are the levels where you can keep your stop loss. However, a break of this can kind of, lead to something there like 1392 or 1402 levels. 1402 levels, that's for intraday. However, on a positional, you need to wait for a break of 1412 or 1409 though there. And let's see what is happening in HDFC. So HDFC is all but a dead stock now because because of the merger. As the merger clearance has also got, the merger arbitrage will be gone. So slowly players will shift their entire holdings towards HDFC Bank over time. So it needs, however, it needs to, as long as it is traded, it needs to break 2251 to cover this zone, to cover this area. However, we need to see if indexes are performing well. So overall, if you see most of the stocks, especially index stocks or indices, you're seeing a very good price action. That means you see that kind of a higher lows are forming. So if you are on the positional side, you may want to consider going for kind of longs in index stocks, however with decent stop losses and also position sizing. See, why I emphasize on position sizing is, when you're trading, you need to trade with an edge. What I mean by edge is you need to have control on risk. So let's spend a minute on understanding what I mean by edge. So what happens is, for example, if you are taking a trade, so you have return, right? You have return, but this return should not be looked at in isolation. What I mean by that, it means the return should always be adjusted with risk. It should be adjusted with risk. Otherwise, you will not make money in the market. What I mean by that, I'll give a simple example. I'll give a good metaphor that I share with my students. For example, if there is a bus, right? If there is a bus. Now, if you have to get into the bus, suppose you are very you need to go somewhere, so you need to get into the bus. So if the bus is standing, if the bus is still stationary, the risk is zero. The risk is zero. So you can get into the bus and then go. So that is your incentive. So if the risk is zero, you can get into the bus without any hassle, and then you can go. But if it is a running bus, your necessity has not changed. You need to go urgently. You have to go to your destination, and you have bus, you have destination. But what is different is it is running. It is running. So the context has changed. So what is different here is context. That means you need to understand the context in the market. Without understanding the context, if you are taking trades like a dumb trader, you will end up making losses forever. Whether it is intraday, it is long-term investments, whether it is positional trades, whatever it is. Remember, in life, if you want return, you need to adjust it for risk. It doesn't apply to only trading. It applies in life. If someone offers you, like say, some kind of money or something, you need to see what is the risk behind it. What can I lose? That is the question you need to ask. But what happens is between 9:15 and 3:30, traders go dumb. Write it on your something like a board where you can see during trading. You have to memorize, you have to train your mind saying that I am dumb because I cannot see risk. But the day you can see the risk and you can assess the risk and you can appraise the risk, that you can size the risk properly, then your dumbness will be gone. For example, I take trades as if I can understand risk like hell. That means if you know your risk well, and if you're damn sure that I will not lose big time in this, I take the trade. If I do not see the risk, if I cannot understand the risk, if my risk is large, I am going to dump the trade. I'm not going to take it. Either you dump the trade or you become dumb. Okay, so you need to understand risk. This all looks good when you're not trading. Let me tell you, all these good things that that anyone teaches, they are very good when you're hearing, when you're sipping your coffee and then hearing, because your mind is totally rational now. But after 9:15, the moment the bell rings, your mind is irrational. You are a stupid man or woman. Why? Because you will not understand risk. Between 9:15 and 3:30, it's like we are in an examination hall. Does your mind work in an examination hall? No, it won't. That's why you need to prepare well. Most of the students who go unprepared in the examination hall, they are dumb. Similarly, traders who are not prepared before the day, or who do not assess the market like the way I am doing now every day, they are dumb. I'm really sorry to say this, but they are dumb. And at 9:15, they are blindfolded. The market will play with them. It will clear their accounts. And end of the day, what is left in trading is nothing but failure. So you need to understand risk very well before getting a return. Anything in life, if someone offers you, like, say, kind of a huge amount of money, you need to ask, what is the risk I'm taking? Am I going to pay more than the return that I can chew? That means, will I suffer more than what I can chew? You can't have, kind of 1 kg of rice within your mouth, right? You're going to stress your mouth. So like that, you should not chew risk that you cannot chew. So at the end of the day, what happens is, if you take large risk, you're not going to handle it properly. Your mind goes blank, your heart goes weeping, and then you will end up, kind of crying for good trades. So at the end of the day, what I'm trying to say is, you need to look for risk adjusted return, whatever trade you are taking, even if it is an intraday, scalp, anything, you need to adjust for risk. How you adjust for risk? You need to be educated better. You need to practice a lot. You need to be understanding the market better. If you do not understand the market, don't trade. If you're not in a situation to understand or decipher what the market is doing, do not trade. This is very, very important. And with that in mind, have a great day. Please subscribe to my channel if you have liked this content, and be safe. Bye, guys.